everybody. Welcome back to Personal Pension Radio, episode number 250. So cool to get episode number 250 ready to go for you. Thank you for joining me on the podcast. Thank you for the downloads. Thank you for all the feedback and the reviews. Those of you who have shared the podcast, I love it. Don't forget to subscribe, and even more so, share the podcast. I've got a great story today, actually. A tough story to share, but happened basically someone shared the podcast, shared the connection with me that they made through the podcast for a huge benefit for a family, and I really appreciate that. So for those of you who are new to the show, a little bit about me. I am a certified financial planner professional. I'm also a paralegal at an awesome law firm. So I take care of the full 360 degrees, like that full 360 degree approach to investment and estate planning. It's all interconnected. My focus as the income engineer is, you might imagine, retirement income planning, because it's not enough to have an investment strategy for retirement or a 401k or an IRA or life insurance or whatever it is. You've got to have a retirement income strategy. Accumulation, investing in growing assets is critical, but an income strategy for retirement is where I get my moniker as the income engineer. But if you have questions about any part of your estate plan, whether it be the legal side or the financial side, feel free to send me an email, Craig with a K, at craigstrom.com, S-T-R-O-M. So an important thing I want to add, again, this is important, I think, because I've gotten some feedback lately from folks who heard an episode where someone had left a review about this podcast saying that this guy doesn't give any answers or any of this or that. Well, this show is not about answers per se. It's about information to really get you thinking. It's about building a relationship with you, the listener or the viewer. By the way, this is going out on YouTube, Facebook, LinkedIn. You can find video content from me and podcast content in a variety of places. But it is about building that relationship, encouraging you to take steps to ask questions on your own, to challenge the norms, to challenge conventional wisdom, and in doing that, building a relationship rather than just pitching an idea. I get so sick and tired of listening to Sunday AM radio, for example, where they are just pitching, whatever it is, whether it be real estate or mortgages or life insurance. It's just a pitch. And this show is really about that relationship side, that if you listen to this show enough and you understand who I am as a person, and you think, well, this is the kind of guy that I might be able to talk to about my estate plan or my retirement plan. That comes from building a relationship, and podcasting is a great way to do that. Video content, so that you know who I am, because I don't really edit these videos. It's just me. This is who I am. So as a quick personal note, in addition to being a certified financial planner professional, I'm also a paralegal, yes, but I'm also husband to Amy, extremely patient wife, Amy, and father to Madeline. Now, Madeline, you're actually going to hear from her on the next episode. I had planned on having her on today's episode, on this episode that you're listening to, 250, but due to schedule and so forth, she's going to be on the next episode. Now, I have a couple of hobbies that people who have listened to this show for a while, they know. I am a woodworker. I build cabinetry, furniture, and currently am constructing my own solid wood countertops in my kitchen. And yes, it has taken a long time to figure out exactly what the countertops will be, but they are underway in construction finally after 4 years of trying to figure out what exactly I wanted to do. I do build furniture, cabinetry, a lot of those types of things. I'm also a crazy car guy. We'll just leave it at that. I'm a crazy car guy, and then we'll jump into today's episode. Now, before I forget, the disclosure, as always, you heard me say it, I am a certified financial planner professional. I am not a CPA. I'm not a lawyer. I do work with a phenomenal law firm and great CPAs. All that to be said, please don't act on things that you hear on my show as if you're hearing advice for you in your specific situation. Please especially don't act on things that you hear from financial entertainers. Financial entertainers are those people who have no licensing, no business really giving out financial or legal advice, and yet they're throwing it out left and right with no real consequences if they get it wrong. I have consequences if I get it wrong. I want to do it right. So before you go out and act on something, please contact a hopefully certified financial planner or send me an email. Craig with a K at craigstrom.com. That's happened so many times with my listeners. Please send me an email, craig at craigstrom.com. If you have a question, if you're looking for something, an answer to a question, please send me an email. I look forward to actually helping in any way that I can, and sometimes folks actually become clients. It's outstanding. I love that. So let's jump in. I actually do have an interesting deal of the week. It's a bit of a somber deal of the week, but I want to share this with you because this is the way I kind of thought about it after I really analyzed all this. It is a tough story to share, but one of my clients and a podcast listener introduced me to a family going through a very rough time, really difficult time. Erica is a single mom, 4 kids. Single mom, 4 kids. There's a whole backstory to that, but she's a single mom and she's got 4 children, okay? Erica had inherited a pretty substantial real estate portfolio from her grandma. Pretty awesome, actually. Real estate portfolio worth about $7 million. And the income from that real estate has allowed her to be home raising her children from very young ages because she has income from that real estate that pays for their living and lifestyle expenses and so forth. And she's been truly blessed by grandma having left her this $7 million worth of real estate. It's truly amazing. Now, the very difficult part of this introduction, and by the way, shout out to Maurice. Maurice is a client after he was a podcast listener, and he's the person, he's actually Erica's friend that made the introduction because of this tough news that I'll share now. Erica has received early on in 2020 a cancer diagnosis. And after a lot of struggles and a lot of medical treatments and back and forth and a very difficult time to go through all of that drama, she has now received the news that she will not survive. She will not. She's not going to make it. The cancer is just too far gone. They cannot stop it. So it is a foregone conclusion now. And her friend Maurice, listening to this show, had heard me talk about estate planning, and he got his own done, he and his wife, and he was bold and brave, and he went to his friend Erica going through this very tough time, and he asked her what can be a difficult question, because, you know, do people really want to talk about dying and estate planning even if they are in that situation? Most of the time, no, they don't. Well, Maurice actually did. He went and asked the question. He was bold, and he asked, and turns out Erica had received this wonderful inheritance from her grandma, but in the midst of raising 4 kids, 3 of them still under 18, life as a chauffeur, you know, to music classes, and what else was there, soccer, and a son in football, and all this stuff, she had never stopped to take care of what is ultimately some fundamental basic estate planning. She hadn't done any of that. She didn't have any estate plan. She didn't have any wills, powers of attorney, living trust. She didn't have any of that done. Well, she did end up getting her powers of attorney done because when she was admitted to the hospital for some of her first rounds of cancer treatment, they asked her for a power of attorney for health care, and she didn't have one. So she did get that done. She had named her girlfriend as her power of attorney. Here's the worst part of all. She didn't actually have any guardianship provisions for her children. Nothing written down, nothing legally binding written down. What that means, folks, just to make sure that you understand, what that means is that if Erica had passed away with no estate plan, with nothing written down, her children would basically become wards of the county where she lives, wards of the state. That doesn't mean that the county is going to stick the kids in foster care for the rest of their lives. It does mean that her family will then have to, or would then have to, go to family court to negotiate with the court and say, this is why we should be the guardians. Erica wanted us to be the guardians of the children. That could be a time-consuming, very expensive process, and it's just an unnecessary piece of stress that someone needs in this time. So the guardianship piece was huge. Erica hadn't thought anything of it. Thankfully, Maurice actually stepped up, and again, he was bold, and he asked this question, and she said, no, I don't have any of this stuff done. I don't have any of this stuff, okay? Long story short, Erica is now a client. She's now a client of my law firm. She has her estate plan done. All of her real estate assets are now inside and labeled and funded properly in her estate plan. Her children have children's trust provisions established and prepared. When Erica is gone, her children will have money for health, education, maintenance, support, lifestyle. And the guardianship is taken care of. Erica's best friends said yes to being the guardians of her children. And Erica now has an estate plan that provides financially for her best friends to take care of her children the way that she would want them taken care of. They will be okay. Financially, her best friends will be okay, and her children will be okay. Yes, it's going to be very hard to lose mom, but financially, they're not going to be hurt by the lack of any kind of planning. That can be extremely expensive and very stressful for the best friends, for the people left behind, if you don't actually have that stuff in place, okay? So, why is this in the Deal of the Week segment? Here's why. All of that planning that we did for Erica, okay, because she did have some substantial real estate assets that she had inherited, which, by the way, were all in her name, which means all of that would have gone through probate. All of the $7 million would have gone through probate. What does that mean? The county where she lives, basically, or wherever the properties are, because there's actually properties in 2 different states, so they would have been probate in 2 different states. Those county courts get to decide how it all gets split up, and family and friends get to argue for who gets what, and the kids get what, and all of that. It would take at least 2 years. At least 2 years, and it would cost somewhere in the neighborhood of $700,000 minimum, probably more than $700,000 with probate fees and attorney's fees. Not to mention a whole litany of other things that could come up as a problem waiting for probate courts to settle out an estate. Oh, just incredible how much it could actually cost. So, $700,000 potential estate probate bill for her kids basically to have to lose that money. And by the way, Erica doesn't have $700,000 in cash sitting in a bank account somewhere. She's a single mom living off rental income from these properties. She's doing okay, but she doesn't have a ton of cash in the bank. So where would they get the money to pay all the probate fees? Yeah, they would have to sell real estate. They have to sell real estate, but they might have a hard time selling the real estate because it's locked up in probate. So how would they pay for the attorneys? I don't know, right? So here, that's where it could be very, very difficult. So now, all of these properties are titled in the estate plan for Erica. Everything's done right. No probate. It won't happen. It's not going to happen. Her children will have special trusts that will be done. A trust will be done to protect those assets when they inherit the assets properly. There will be asset protection from creditors and liability wrapped around them. The best friends will be guardians. They will have provisions for cash flow to take care of the family and make sure that everything's okay. And it cost about $6,000. $6,000 to save $700,000, potentially more, in probate nightmare. That is one heck of a deal. That is a deal of the week if I've ever heard one, and that's why I put it in the deal of the week segment. When I hear people talk about getting their estate plan done, I've talked to folks that just blow my mind when they're talking about $5, $6, $7, $8, $9 million in potential costs that their family will suffer through, and they're balking at $10,000 to get their estate plan done. It's $10,000 versus $5 million in expenses and nightmare. Folks, that is a deal. Get your estate plan done. If you haven't had your estate plan reviewed in a long time, or if you haven't done it, send me an email, craig@craigstrom.com. Let's get that conversation going right now. If you love your kids, that's what you do. You get your estate plan done, okay? If you don't like them, you actually write a handwritten will. You and your partner write a handwritten will. Make sure they say different things and then hide them in different places in the house so that the kids and family can fight over stuff when you're gone. I'm kidding, of course. Please get your estate plan done, right? I love helping people get that done. Now, I will tell you that Erica confided with tears in me how much she loved Maurice for introducing me, because I give all the credit back to Maurice for actually making the introduction, right? Shout out to him all the time. But she confided that she has this weight lifted off her shoulders, that she is now able to focus on spending time with her children. She doesn't have this other stuff to worry about and to stress about. It's not a great situation, but it's not made that much more worse when you have to think about what if. So I'm really happy that I've been able to help and to be part of that. But I ask you, I encourage you, please take care of that estate planning conversation sooner than later. And that rolls into the piece that I wanted to share today, which is the title of this episode, which is, how do you talk to your parents about estate planning? How do you talk to your parents about estate planning? And I'm going to give you my feedback, and I'd love to hear yours. Send me your experiences. Send me anything, like if you've had an experience over Thanksgiving dinner that you opened the conversation about estate planning in a particular way, please send me an email and tell me, this is how I did it and it was great, or this is how I did it and it went terribly wrong. Craig@craigstrom.com. So here's some questions to ask. Start with questions, because that's the idea, is we got to at least have an understanding. We have to know what we're dealing with. Ask mom and dad, do you have your powers of attorney done? Don't ask them about an estate plan yet. Ask about powers of attorney. Hey mom, hey dad, do you have your powers of attorney for healthcare? For financial matters? Oh yeah, we've got that. Well, great. Who is your appointed representative? It's also buzzword, legal phrase, attorney in fact. Mom and dad, who is your legal representative if you're unconscious all of a sudden? Who do we talk to if we need to use a power of attorney? And mom and dad, let's say mom says, well, it's your dad. Well, great. Who's the backup after dad? Because if mom and dad are in the same car accident, mom and dad might both be unconscious. Who's the backup? Where do we find a copy of your power of attorney, mom and dad? We really should know where that is, just in case, right? And by the way, all of this, it's very helpful if you already have your estate plan done and you can say to mom and dad, here's a copy of our power of attorney. By the way, we've named you as a backup power of attorney in our documents. Here's a copy, okay? It's helpful when you're trying to get information about mom and dad's planning, to be able to say, here's a copy of ours, where's a copy of yours? That's important to note, okay? Now, if your mom and dad own a home, if they own real estate that's worth more than $100,000 in virtually any state in this wonderful union of ours, if they own a home, you've got to ask, hey, mom and dad, do you have a living trust? Do you have a living trust? Because if you don't have a living trust, it is very likely that in whatever state you live in, and mom and dad die and they have real estate, that real estate will go through the probate court process, which is time consuming and often very expensive. It may not be as expensive as it is here in California, but it's time consuming and it's not something anybody wants to go through. So ask them, do you have a living trust? Great, you have a living trust. How old is it? Has it been done in the last 3 to 5 to 10 years? We did it 20 years ago when you kids were in high school. Oh my heck. That means we got to make sure that thing is reviewed. Here's a buzzword question. Buzzword, here's a phrase, a big question you got to ask. If they have a living trust, has it been funded properly? Funded properly. Is the house titled correctly in the living trust? This happens all the time. Folks get a living trust, they title the house in the living trust, and then 5 years later they refinance the house, and the mortgage company takes the house out of the trust and doesn't put it back. And now the trust is basically worthless because the primary asset is no longer funded in the trust. Folks, ask the question, if mom and dad have a living trust, is the trust funded? Are you sure the trust is funded? Do you know for sure that your tax bill actually has the name of your living trust on the tax bill? That's a key way that you can tell whether the trust is funded correctly, that the name of the trust is actually shown on the tax bill, right? If they say, no, but we have a will. We got a will, no problem. Well, tell you what, if mom and dad have a will and only a will and they have a home worth more than $100,000, it's your choice. But seriously, you might want to step back and say, man, I hope you don't have me listed as the executor or the executrix, because you're going to probate. You're going to probate, and if you go there alone, you get to learn how to run probate for maybe 12 months to 2 years here in California, right? So a will just means a guaranteed ticket to probate. So if they only have a will, that's where you come back to something like, don't you love me? Don't you love your grandkids? Like, what do you mean? Well, explain the probate process in general, but really maybe encourage a phone call with a good financial planner or an attorney or someone that can have the conversation about why a living trust is seriously important, right? Because I say it all the time. Most parents, they don't personally need a living trust. You really want to get one if you love your kids and if you love your grandkids, get your living trust done, right? So if they say yes to having a living trust, that's great. Make sure that it's funded correctly. Then, who's your backup trustee? Find out who your backup trustee is for your parents. It might be you. And then it might be the first time you've ever heard that you are the backup trustee for mom and dad's estate. And then the question is, where's a copy of the trust that I'm going to have to manage? Where would I find a copy of this trust that I'm supposed to manage for a year or 2 years or whatever? I don't know, right? Because some trusts can go on for a long time, like Erica's trust that we talked about, I mentioned earlier. That trust will go on for years, for decades. Somebody's got to manage that, right? So the question is, all right, where is your trust and who is your backup? Who's your backup to your backup? And where can we find a copy of your trust? Because if you are the backup trustee, you really should have a copy of that document available. You never know. Things happen, right? You've got to know this, right? This story comes to mind when I'm talking about this, that I met someone who called our firm asking questions about how to settle up an estate. This person lived in the Bay Area. He still lives. He lives in the Bay Area in California, actually in Berkeley. And he had lived next door to a sweet little old lady for many years. And if you know anything about California, real estate is super expensive. Well, in Berkeley, it is ridiculously expensive, okay? And they both had lived in those homes, respectively, for many years as neighbors. Well, she's a widow. He's a single guy, a widower. They were just friends. And she asked if he would be her representative. Could she put him down in her will? He said yes years ago and forgot about it. He said yes and forgot all about it. And then she passed away. 2 years ago, she passed away. Well, I meet him through a phone call, a Zoom meeting this year, where he contacted our firm through an accountant that we work with who referred our firm. Anyway, turns out she had just the will. And she had that home, and she had bank accounts and investment accounts and a variety of other things. And guess who her appointed representative was? Yep, the neighbor. He finds out after the fact when she's passed away that, hey, congratulations, you've got to settle this probate. You've got to settle this estate. And so he had been in the probate process for 2.5 years because it turns out this little old lady actually had way more than just the house in Berkeley. She had quite an estate. And he's been suffering through that. And he was asking me questions about, what do I do? How do I get out of this? Well, long story, but he's still wrapping it up, okay? And he'll finish it up this year because he's already that far into it. There wasn't much that we could do. He could turn the reins over to a professional trustee and basically quit, but he's finishing things up. Folks, this is where I come back to talk to your parents about their estate plan, right? Even moms and dads, parents, talk to your kids about your estate plan. Find out, did your kids get a living trust and a will? Did they name you as guardians of the kids? If they did they build in provisions to make sure that you were not going to be financially impacted by that decision? Did they name you as successor trustee or healthcare power of attorney? Is there something out there that's going to surprise you, right? So kids, talk to your parents, right? Whether you're having virtual Thanksgiving this year or whether or not you're having a funeral for your pet turkey so that you can all get together like we do here in California with more than 6 people, you can have a gathering. So a lot of folks are having a funeral for their pet turkey so they can have a larger gathering at their home. Whatever the case might be, please talk to your family about this stuff. Don't leave it to chance. And once again, thank you to Maurice. He's a listener. Maurice, thank you so much. And just really, truly, the blessing that you brought to Erica and her kids, you just can't say enough about that. That is just awesome. I'm glad to have been able to help them get that process. My firm is wonderful, and they are just great people that got that done. And, it's a tough situation, but really a better outcome because someone spoke up. So folks, take this opportunity to have those deeper conversations, talk about these things with your family, and if I can help, send me an email, craig@craigstrom.com, and I'm happy to go through anything I can to make things easier, to get you ready for that Thanksgiving conversation if need be. Take care. We'll talk to you soon. Bye.